Good evening there, everybody. Sorry for a few minutes delay. All right, so here's what I want everybody to keep registered in their mental analysis. So here's what you want to keep in mind is, all right, so the McMuffin. But let's kind of concentrate on this for the beginning. This is why identifying reversals is very important for telling us exactly what's happening in a price trend. We saw the Morningstar signal and the close above the T-line. It was even more prevalent over here in the NASDAQ when we saw the Morningstar signal but the best friend gap up and the close above the T-line. If you But the best friend gap up and a close above the T-line, that in itself becomes a very powerful reversal. Now, when you follow it with that doji sandwich, the McMuffin, the reason I put out the McMuffin, because even though it doesn't happen very often, when it does happen, it is a very, very reliable reversal. And look at just the components of it. Right here, the best friend signal by itself would be good enough. And the fact that it did a Morningstar signal would be added reversal confirmation. Then when you add the doji sandwich behind it, if you add that all together, if we know the Morningstar signal is a strong reversal signal, one of the 12 major signals, and we know that the doji sandwich implies more upside, obviously, when you combine the two, it's that much more credibility that we're going to be in an uptrend. So let's take a look at the futures first. Here's gold, just kind of moving sideways, not anything that's tradable. Here's crude oil. Whoops. You can see where it's kind of hovering right here at the $20 level. It's actually $20.64. So that's still telling us kind of watch for a base. And what would change the base pattern? They close back up above the T-line. That would be your additional confirmation or your confirmation that you're starting to come back up again. Now, because we've had this strong reversal signal, is this just a pop or what's happened here? Well, we've had 1, 2, 3, 4, 5 days of indicating that the bulls are starting to take control. Now, in the options room today, I was pointing out that even though we've got some good patterns, here's Netflix doing kind of a bobble breakout, making up here your next likely target. But because there's been so much speculation, I guess, say, that the bottom is getting pretty close in this market, the prices of the options have not gone down very much. John, the best friend is a doji followed by a gap up. We call it your best friend because it's got two aspects to it. One, it gives you a high probability you're going to be in an uptrend, and two, that the uptrend is going to be relatively strong. Because if you look at the breakdown of what this signal is, it's a day of indecision, and then look what you can tell they've decided. They've decided to come back in with great enthusiasm or great strength. Kind of looking at the same thing over here on NVIDIA. Little spinny top gap up. But look what's happening to NVIDIA. Kind of hovered right here at the 50, and today kind of did a wave 1, wave 2, starting wave 3, making this your target or filling the gap your target or eventually up here at the recent highs. But that one we tried to buy options, and they were also too expensive. If you see a bullish signal, but the stochastics are not in the oversold area, do you get in? Not necessarily. Or I'll take a look right now, since that's probably a question that everybody is. JP Morgan. Well, you saw the buy signal. The buy signal was here. Look at your kicker signal in the oversold area. Came up above the T-line. What did it do when it came back to the T-line? Did a bullish engulfing signal. So even though your stochastics are here, the buy was down here. All this is confirming that your uptrend is in progress. BABA, same scenario. There's your best friend signal. Morningstar signal, close above the T-line. That was the reversal. This is just kind of telling you when they consolidated back here on the 200, the buyers are stepping back in. So remember, the buy signals, what was your third one? Oh, Boeing. The reversal was down here. Remember when we identified the fact that you're starting to see a series of dojis down here, and this told you the buying was there. Now, you're in an uptrend, so what type of pattern are you looking at from here? Looking for a J-hook pattern on positive trading. Yes, somebody had mentioned that, Rigid, that you don't necessarily have to buy the calls. Maybe you sell the puts. And we'll have to go back and look at that. Oh, just because of the price of the options were so excessive that you'd have to move practically all the way up here. If you were buying the at-the-money calls, they'd have to move all the way up here. Now, that doesn't necessarily mean that you couldn't buy the calls, but you're just at a higher risk. You're paying a higher price for the calls. And if it does move, I mean, if you're paying $15 right now, and I'm just trying to remember which ones we were looking at, $15 or maybe $18 for the at-the-money, that if it does move up here, maybe your $18 goes to $24, which is 25%, but that's not a very big profit margin for exposing your putting money out at risk on an option price. Catherine, no, the 50-day moving average is just as significant. Let's take a gander here and see if we can. You can see right here is the Netflix drifted back. It kind of drifted back to the 50. So if you're trading on the 10-minute chart, the 15-minute chart, the 5-minute chart, you're probably paying attention to these moving averages because they're on everybody's charts. Would you consider getting into those now? As far as the biggies, you can. I mean, you can if you want to. But because the price of the options are so big, because these are the ones everybody is watching, that maybe with that as an additional confirmation that we're probably in an uptrend based upon what the market indexes are telling us, that you go find other stocks that aren't followed as heavily, but still have good volume. And I'm trying to think of which one I was thinking of. I don't have one right off the top of my head. Let me, let's just use M-Chip, for example. Maybe it's setting up for the next buy. You might be able to buy those calls much more reasonably. Wanda, a J-hook pattern is a strong price move, then it pulls back, and you can tell it's pulling back, not selling off, just pulling back by the nature of the signals. And this is where we use the T-line to confirm. So if this started trading positive tomorrow, what was it telling us about the T-line? It was holding. And if it is a doji here today, what's our doji rule? If it opens positive, it's probably going to trade positive. So a J-hook pattern is a strong price move, and then it pulls back and does a J-hook, which means wave 3 is usually the same magnitude as wave 1. So if that's the case, you might start buying this stock and or the calls with the idea that if this was wave 1, wave 3 now has the potential coming up here. Okay, let's see, I'm getting way off track. I wanted to spend, so real quick on the futures, soybeans, wouldn't really be doing anything with those right now unless it breaks out to the upside. If it did that, and that did a J-hook pattern breaking out, wave 1, wave 2, wave 3 would likely take you up to the 200-day moving average. Wheat, nothing. It's toppy. Wouldn't be trading this. However, look at hogs. It did a left-right combo right here. Down, I think it's probably down the limit and down the extended limit, $4.50. So it just puts you in situations where the probabilities of being in big price moves is very easy to identify. So I'm kind of orienting this to our weekend. It's this coming weekend. This coming weekend for 2 days, Saturday and Sunday, we will be sitting practically 8 hours a day, going through a different approach on the signals and patterns. We're going to take a look at how the T-line is very effective, then start working backwards of going into which signals and patterns, or why the signals and patterns have added confirmation. Kenneth, even when I did the spreads, I usually do a spread where if it's a $5 spread, I probably don't want to pay any more than $2 for it because of the factors or your risk factor. So a lot of people say, well, if you can buy it for $2.50 and it doubles, isn't that good? Yeah, but if you do that over the long period of time, because of the risk reward, first of all, you want to make sure it's moving in the right direction. Secondly, it's got to move in the right direction to the magnitude to maximize your profits on that spread. And third, your bid-ask spread kind of gives you a little bit of a disadvantage or a hurdle to get over. So I usually try to keep my spreads at $2 to have it go to $5, or $4 to have it go to $10. Well, a lot of the spreads on the biggies were at $4.60, $5.10. They were way not enough to make the risk reward worthwhile. So what I was illustrating in the options room was there are times when, even though you can see a chart pattern or a price pattern working out nicely, that doesn't mean you can necessarily buy it. If you can't make money with it without extending your risk-reward factors, go on and find something else. Just someone to go over over thing in general. Oh, what's that? Is it still a kicker if the lower candle before the gap up is not red? Meaning like this one right here? Yeah, it's not a kicker signal. It's a doji gap up. This one is a bullish flutter kicker. Opens here, closes here, gaps up, and goes in this. Is this the one you were asking about, Don? Hold on, I gotta get out my trusty little back scratcher. So, remember what would happen if this was a green candle. It would be a doji sandwich. In this case, it's a bullish flutter kicker. Is cattle similar to hogs? There's a political scuttlebutt about price fixing in live cattle. No. Sometimes they work in correlation with each other. Sometimes they work against each other. That if people are buying cattle, that means people are buying steaks more than they're buying pork chops. Other times, people are buying lots of meat, so both the cattle and the hogs move in the same direction. Okay, hold on. We're getting way off track. CM calls aren't very expensive based upon expectations. No, I don't have the straight calls. I've got from down, where was it? Down here somewhere, I was buying spreads because the calls at that time were too expensive, but I could buy a call spread, and it was the 140, 145s at $1. I think I paid $1.45. So if that went to $5, that fit my parameters. But buying the calls outright was too expensive. Plus, when we'll do a spread evening again. I did the spreads to show you the benefits of doing the spreads versus buying calls outright. Let me know what you need to see if I can show you how to do it. Gene, is that directed to me? But it wasn't a doji. Darn, I forgot which ones we were looking at. John, if you go over to your slide thing, way over to the right, and slide it up real hard and slide it back down, sometimes your text comes back again. Okay, let me get back to in regards to your brother-in-laws, I'll try to have, invite him to the Thursday night session. I'll try to have a better password, maybe like guest, for guests coming in on a Monday night. Yeah. Yeah, if you're discussing something, always put the name of the ticker in front so I know what to go back to. No, Don, a kicker is not with a doji. That's a best friend. But if it's a larger candle than a doji in green, is it still a kicker? No. Oh boy, let me see what. I'll show you the difference. If it's a green candle, doji, or and another green candle, obviously it's a doji sandwich. Which one was I looking at? Oh, this one, ERFS. This one was a red candle, open here, close here. The reason we were aware of the strength of this one is when they gapped it up and did a doji. If we did our scan that night and found ones that moved the biggest percentage and found that as a doji, now we're already set up to know what to look for with the simple doji rule, that if it opens positive, it's going to trade positive, which means that gives you a high probability that this is going to be in an uptrend, because if you took out this little doji, now you have a kicker signal. On the other hand, if this was a green candle and did a doji, it would still do the same thing, but instead of it being a bullish flutter kicker, which is probably a little bit stronger than a doji sandwich, but if this was green, doji, green, you'd still have a doji sandwich. To clarify my earlier question of when I see a bullish signal, not a buy signal, and the stochastics are above 20, I should not get into the trade. No, we just said that if this was what you're looking at, there was your signal, kicker signal, came up above the T-line, pulled back to the T-line and did a buy signal. And your stochastics coming up. You can still buy it, because if it opens positive, what's the next signal or pattern that you've got going on? You've probably got a J-hook pattern. If two green candles, even with a gap up, just two, they're just two green candles, yes. So this is still a buy. It basically told you when they consolidated back to the T-line. Numerous ones like this. This could be a buy on positive trading. That would tell you your J-hook pattern is setting up. Halliburton, if this opens positive, telling you kind of a J-hook pattern setup. So just because your stochastics, remember what we said before, that if you're buying off a buy signal, there's your best friend, gap up. Let's make this bigger. Ew, that was way too big. There's your best friend signal. Stochastics in the oversold area. If this started back up and did a J-hook, your stochastics are probably well out of the oversold area. So remember, you're buying the signals based upon seeing a signal in the oversold area. You're usually buying a pattern when the stochastics are not in the oversold area, and a lot of times already in the overbought area. Okay, so let's go back. So this is part of your entry strategy. We recommended this. If this had opened positive today, you wanted to be a buyer. It didn't open positive, but what did it do? Didn't negate anything, so if this still opens positive tomorrow, you want to be a buyer because of this signal right here. And what was the ultimate reversal? Look at your big hammer signal in the oversold area. Look how far away you are from the T-line. Those are just simple observations that there's been a change of investor sentiment, and it's in the area of the T-line to make that reversal that much more prominent or likely. Doesn't the bearish Hirome and a close below the T-line on how make one of, yes, it's doubtful. But also notice what the nature of the pullback was. Doji, doji, or spinning top, doji, stochastics heading up after a buy, your best friend. What should be your suspicion? Get ready for new buying to come in. Now, if you're long, I closed out some calls today, but I held on to the stock. If you're long, what do we need to see? It's starting back up. If it opens lower and trades lower, you close it out, because now it's telling you they're below the T-line and they're not coming back up. However, the fact that you know the nature of each signal, indecisive, 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 what do you see, or what should you suspect if stochastics are heading up, you've had a strong buy signal, and it's pulling back indecisively, that they're ready to take it back up again? Yes, so dojis are just telling you they don't know what to do, or it's not decisive selling. That's why you want to always know what the nature of each signal is. So for those of you that are fairly new to this, this coming weekend is taking that information and now kind of really, what do I say, consolidating, that's not the right word, concentrating it, coordinating it, it's got to do something with a C, of how that information complies with the T-line. And once you get that, now you start understanding what the nature of human, or what the characteristics are of human nature, and allows you to project when the next strong price move is going to take place based upon knowing how human nature sets up for that next price move. INO. These are that was a little bit of a toughie today, because it looked like it was trading positive and then pulled back. So here's the entry strategy. I didn't buy any of this today because I was working on other stuff, but it looked good, and I put out a recommendation you could be buying it because that's what we expect gapping up. In general, are you bullish? Yes, because you find so many stocks with reversal signals and patterns. Hold on. Let me finish this. If you went long, what other piece of evidence told you they weren't really selling this off? Because look where they bounced. Right off the T-line. And I hope that sinks into everybody, that because it bounced right off the T-line and started trading back up, it wasn't because it came back down to a level that everybody was watching, because nobody has the T-line on here. It came back down to a natural support level. Jim, where does a dark cloud occur? I'll answer that for you. It occurs when you're in the overbought condition. Just because a candle formation looks like a signal, yes, you want to be up in the overbought. Just because a candlestick formation looks like a signal doesn't mean it's a signal if it's not occurring in the right condition of the trend. However, you don't disregard it, because if this opened lower and traded down here, yeah, that tells me, this didn't work, get me out of it. Yeah, and again, you just now had buying breaking out. So if this fails, it's because it's come back through the T-line. And it's, it's not even a dark cloud, right. It had to close more than halfway down this candle. So those are little, that might sound like it's splitting hairs, but you got to remember, the Japanese rice traders have provided us information that they have identified over 400 years, and they've given us simple criteria. In this case, without it closing the halfway point, nothing has happened. Ed, hang on to your individual ones until I tell Jim to do the double line. Let me start going through some of these. This is why, look at the big gap up on BLH. Now, why would not you, let's see, how can I say it? Why would you hold off jumping into this? Well, it opened up 50% above where it closed, probably want to watch to see what they're doing. Now, once that starts turning red, what's that telling you? Yeah, they're not buying. So where would I be a buyer? Well, if they pulled back and then turned around and came back up through the open, then I might start buying. Because what would that tell me? That after they took profits, buyers are coming back in, exactly what we would suspect. Now, I'm going to be a little bit more tentative about buying something that closed at 12 and opened at 21 or 20. That's up 65, 70%. Remember, I'm in the business to make money, and if this is not a good place to have good probabilities of making money, I'm going to hold off. Now, if it opened here and traded off and then came back up, yeah, that's telling me what I'd want to see without any major risk. Is that a reverse belt hold or a bearish belt hold? It could be, depending on how they open this tomorrow. Now, on the other hand, if they open it positive and start trading positive, that you're probably heading back up into that. They offered came out with an offering. That's the killer. Is you get a good situation, the stock's trading up nicely, and then the next morning before they open, they announce they're putting out new stock or a new bond offering. There's nothing you can do to protect yourself from that. And they're doing it at $12 a share. All right. Okay, so this is part of the entry and exit strategy. The entry strategy is that you don't want to get into something that you see immediately start selling off. That's telling you the bulls aren't there. Now, we've got some good trades we're sitting in. Plantronics, big bullish engulfing after spinning top, spinning top, spinning top, and then a close above the T-line. And there's your little J-hook pattern. And why is this much more identifiable? Because look where I pulled back to, right back to the T-line. CMD. Doji. Look at what your pattern is right here. There's your cradle pattern. And what did it do today? After it consolidated on your double doji setup, and remember, a double doji is the same thing that's telling you what the magnitude of the selling is. Indecisive, right here on the T-line. That's telling you they're still in here. I would suspect at least heading up to the 34. So that the fact that they pulled it back, and they did it with indecisive signals, with stochastics coming up after a buy signal, this gets you ready to get prepared for the next price move. Hammer, doji, finally closed up above the T-line. That's when I think about buying. Now you can see you can stay long as this stays above the T-line. Notice your T-line crunch. Another piece of evidence that they aren't selling this off. Even though you can see you're heading into a resistance level, the T-line was kind of crunching the price up through that level. AAOI. Doji, kind of a cradle pattern above the T-line. Notice one thing that didn't happen over here. This would be a case where if I close this out and then came back up, I was either buying when it came back up, if I was watching it closely, or you definitely want to buy this on positive trading tomorrow. Because what would you have going on? A doji sandwich, which would be confirming your J-hook pattern. We did Halliburton. Halliburton, you can still get ready to buy this, especially if it moves positive. Hasbro has been a good trade. Doji, spinning top, gap up. And what's our doji rule? It's going to move in the direction of how they open after a doji. If they open it positive, what's it telling you about the T-line? It's not acting as a resistance level anymore. Now what do we got going on? A little There's your consolidation, your double doji consolidation. Where do you think wave 1 is going to take wave 3? Probably at least up to the 50-day moving average. Oh, well, I don't know whether you can find a trend channel on this one. I would say no. I would say you've broken the downward channel or downward trend, and now you're back up above the T-line. Hold on to your individual ones until we get to the, see, we're not even getting through the ones that we own, let alone the ones that look good. Be ready to buy M-Chip on a positive open tomorrow. Wave 1, indecisive pullback. Wave 3, bringing you up into this area. Ping, because of the belt hold signal. Look where the belt hold signal occurred. And look how far away you were from the T-line. What do you do here? You just stay long as it stays above the T-line. Okay, so CZZ, what's your simple rule? What is your strongest signal, individual signal, the kicker signal? If I'm long, there's my left-right combo. Then they gapped it up above the T-line, kind of a bullish flutter kicker. You're in an uptrend. But when they gap it down and close it below the T-line, what's that tell you about the force of the bulls? It's gone. Close it out. This is part of that process where if you know that 1/30 trades aren't going to work, when you see it not working, get out of it right away. Because this is where the emotions kind of kick in. That you got a good trade, you're happy, and then bam, they close down here. What am I thinking? And this I'm saying me because this is probably the way a lot of people are thinking. Maybe it will come back because it was such a good trade. No, something changed here that told you get out and go on to something else. Now, it used to be I would hang on to see if it would come back up, because now what is my analysis of this trade? I'm hoping that it's going to come back up. There's nothing on this chart that tells me I want to be long. So if I didn't close it out here, I only had one criteria. It had to open positive and trade positive. If it trades lower, close it out. AU, there's your Morningstar signal. There's your doji sandwich. There's your pullback. What's the one thing that we can take notice of on this price move? It hasn't closed below the T-line. What do you want to do on this one tomorrow if you own it or if you want to own it? If it opens positive, you can be buying. If it opens lower and starts trading lower, you close it out and wait for the next buy signal. Or you just have to tell yourself, this one didn't work. This one we had evidence of. See if I can do this. You could pretty much, from somewhere up here, it was a downtrend. And this broke up above the downtrend. Notice it used the T-line as support yesterday, Friday. You still stay long because what do you have going on in this chart? Well, Shazam. Look at wave 1. Look at where wave 2 came back to. There's your bullish, let's make this bigger again. There's your bullish flutter kicker signal. If you took out this little flutter, you basically have a kicker signal, which we know is the strongest of the reversal signals, and where did it occur? Right smack dab on a level that everybody is watching. So what do we got going on? Wave 1, wave 2, now wave 3 is broken out. What do we expect from here? As long as it stays above the T-line, we could be in this price move. So all we're doing is analyzing what's happening right here at the what's going on in investor sentiment right here at a major support level that everybody else is watching. We can see there was a powerful buy signal. Now we can be buying this one. If you didn't buy this over the last couple of days, you just watch this, and if you see a next strong signal, that's when you can start buying. ATI, you can see your bullish Harami, doji. Remember, anytime you see a doji in a multi-day signal or a multi-time frame signal, it's usually going to act stronger. Now, it's consolidated a little bit today, but what's the one thing you want to notice? It's supported right smack dab on the T-line, implying there's probably going to be more upside. There's a gap to fill. I don't know whether they filled it here, but there's another gap to fill here, making that your next likely target. And Chef. So there's the trading rule. We recommended this. It came up above the T-line. It pulled back, did a doji. What's our doji rule? It's going to move in the direction of how they open it. When this opened lower and started trading lower, probably wanted to close it out. What was the worst case scenario? It would trade down and then turn around and come back up. You could always buy it back, because when you were buying it back, which direction was the price moving? In the direction you expect it to be moving. The fact that they closed it here, what type of signal did it create today? There you go, Bob. That's a bearish flutter kicker. So if you took out the little flutter, what do you got? You've got a kicker signal. You definitely do not want to stay long in a strong sell signal. Okay, we did the biggies, right? This is another piece of evidence. So back to your question, Steve. You said, am I bullish because, let me find the question. In general, you are bullish because you find so many stocks with reversal signals and patterns? Partly. I am bullish because of what the market signals told us. The McMuffin pattern. And what adds credibility to that? The big stocks that everybody's watching. There's a bobble breakout, J-hook pattern on Netflix. What's the implication? There's more upside. So we already have good, strong evidence that there is buying occurring in the market in general, and we can see the biggies doing patterns that we recognize. If Amazon opens positive tomorrow, what type of pattern do we have? We've got a bobble breakout, which implies there's going to be more upside. You can call it a flag if you want. Uh-oh. No. On the video? Yeah. You can call it a flag. I'm looking at it more that it's supported off the 200, gapped up, and now it's hit a resistance level and gone through the resistance level. What's the next likely target? Probably up here. Yep. Also, oh yeah, this is also, you've got the mouse pad with the 12 major signals on it. All right. And then Tesla, out of the biggies, is kind of the weak sister. But notice what it's doing. It's pulled back indecisively right to the T-line. If this opens positive, what can we suspect? Wave 1 and wave 3 should be bringing us up here. Now, would I be trading Tesla? If I can't find a way to trade it, probably not. But if Tesla moves positive and I expect it to move up here, what's that tell me about the whole market in general? That probably the uptrend is staying intact. That's right. Okay, that's my. I gotta find the. Oh boy, I couldn't put up the poster. Okay, let's take a look at some of the charts that really look good right now. And as you have seen, I've been putting out stocks to watch for the coming week on Friday or Sunday nights on the YouTube. So look at Kraton, Morningstar signal, now your doji sandwich. Still wouldn't be afraid to be buying this with the expectation that we could probably come all the way back up to the 50, which would coincide with filling this gap over here. When using the 10-minute chart to trail an up move, do you wait for a sell signal and a close below the 10-minute T-line or any close below the T-line to sell? Probably want to see a sell signal. However, I'm not usually going to use the 10-minute chart as a trailing stop unless there is a significant move on the daily chart that takes you away from the away from the T-line. So we did that over here, illustrating what was happening in Tesla. When it started to just going parabolic, we could see it was going parabolic because what was the alert? They started gapping it up. They started moving away from the T-line. They gapped it up. And where did this all occur? At the top of a trend. And this goes to the very basic of candlestick analysis from the Japanese rice traders. Where do most people buy? So what happened was that when it came up here, look where it was trading, all the way up here. Now, if you were waiting for a candlestick daily sell signal, it was here. And then it didn't confirm until down here. But what was the reason that we should be taking profits up here? Because look how far away we moved from the T-line. So I don't have those charts, but if your 10-minute chart was looking like this, which it pretty much did, you kept putting your stop below the T-line. And then up here at the end of the day, it did slam down through, and they took it off, or they crunched it a few hundred points. But that allowed some of the guys in the options room to close out their positions right up here, which on the daily chart was corresponding with up in this range. So again, this is not rocket science. Human nature works the same way time after time. All we have to do is identify where to use it effectively. Okay, whoops, I need my drink. Yep, too far away from the T-line. So anytime you start seeing something move too far away from the T-line, have very simple exit strategies. And this is what we're going to go through on this weekend. What was this alerting us to? Look how far away we are from the T-line. Now, does that mean that the uptrend is over if you get too far away from the T-line? It probably does for the time factor. No, Rigid, I drink Monster drinks, the sugarless one, not because it's a energy drink, because it tastes good to me. So we're going to go through the very simple stop loss strategies or the exit strategies. If it opened here, gapped up, and started trading positive, where do you put your stop? Just below where it opened. Because if it came back down through there, what's it logically telling us? The sellers are taking control. Now, if it opens up here and starts trading down, I put a stop at where it closed the night before, because logic says if it comes down through there, probably the profit taking's occurring. And why are we more cognizant that the profit taking is occurring? Because of the distance you are from the T-line. Again, just normal, common sense aspects of human nature. And the T-line acts like that support and resistance level of human nature. And if you use a very simple rule, the further away you move from the T-line, the higher the probability it's going to come back and test it. Now, what do we think about BJs? Make this a little bit bigger. Look where our Morningstar signal occurred. And now where are we trading? Trading above the T-line. And what did it do today? It used the T-line again as support, which is added benefit or added indication that the bulls are still in control. So I wouldn't call it necessarily a J-hook pattern, but I would anticipate there's going to be more upside. And what else can we identify on this chart? You can see there's kind of a support level and kind of an uptrend. Now, is it going to go back up here? Maybe not, but maybe it gets back up here. And a lot of times what happens is after the big blow off, it trades up, tries to do it again. But if you see a sell signal in here, that tells you they're not getting back up to new highs. You close it out because now you're probably in a sideways channel. All right, so BJs you want to keep on watch. Now, the best friend signal is what implies new strength. This is Lincoln National. There's your best friend signal. And what did it tell us about the downtrend? Not only did it break the 3T, but it closed right here on the T-line with a best friend signal. So where's your best entry point? If it opens positive, you can be buying because what is it telling you? It's confirming your best friend signal, number one. Number two, it's telling you the T-line's not acting as resistance. How long do you hold on to this one? As long as it doesn't close below the T-line. OMI, these are tough to watch or tough to go after, but you can see, maybe in this junk you can't see, but there was a doji gap up. Now you watch to see if it does a 45 degree. That's on OMI. Restoration Hardware. This was an illustration too. There's your Morningstar best friend signal. How long do you hold on to this one? Until you see a sell signal and a close below the T-line. What's a 45 degree? 45 degree is when you see a strong move up. Oh, did I do that on OMI? A strong move up, a breakout move. Then it goes into kind of a 45 degree up here, kind of a just a uptrend. Now the 45 degree may be like this, or it may be like this, but as long as it stays in kind of a steady uptrend, that's usually the result of these breakout type moves. And BNTX. Notice what we had today. There's your best friend. Doji gap up. Where is this going to come back up to? Maybe not all the way up here. It could. But at least it tells us there's probably a good percentage move to get back up into this range. When you say open positive, do you mean in the first few minutes or later? you mentioned today that in the first 30 minutes there's usually selling. Yeah, if you're in an uptrend, it's not unusual. Kevin, I'm trying to think of which ones to illustrate. What did they do today? Well, you saw that they opened this flat and traded slightly lower on the Dow. That was kind of profit taking. So they usually sell off. If you're in an uptrend, they usually sell off in the morning, and then I'll start trading up in the afternoon. Oh, BNTX reports tomorrow. Okay. I saw, and I don't think BNTX has options. So if I was going to trade that, I would probably go after the options. Now, we tried to point out the sector last week that was moving well, which was the shipping stocks. And you can see what's happened in tank. Kind of hovered right here along the 50, and then came back up through the T-line, and notice what's happened since then. It stayed up above the T-line. What was TK? TK also trying to push up through the 50. So that whole sector has picked up strength. Now, why do we want to pick up stocks in a sector that are moving well? Because putting all your stars in alignment would be being able to analyze which direction the market is moving in general, and then being able to do simple scans to find out which sectors are moving the best during that uptrend. Because obviously you want to make as much hay while the sun shines as you can. So you pick out the best sectors, then you go right down into the sectors to see which stocks are having the best chart setups. So that if that sector ETF is moving, that pretty much tells you the big money is buying that sector across the board. So you're not buying something that's out in its just a renegade buy. Jim, I can't remember how to get cotton up here. I think they put an extra expense on cotton. Oops, there's cotton. Would you trade me cotton with the hammer? Not yet. You still need to see confirmation. So you should be watching. You're in the oversold area. You definitely need to see a bullish confirmation. Can you please set up a day for, yes, we will do that. No, Steve, because I'm not buying or selling a position based upon what the dollar amount is doing. I'm trying to think of something. Let's just say hypothetically, we bought puts. Let's say this is a stock instead of cotton, and let's say we bought puts here, and right here we doubled our money. Well, this has nothing to do with what the price move is going to be. And I will even show you why you don't want to do that. Because I bought puts when we first started seeing the market turn over. I bought puts on Norwegian cruise lines. And somewhere down here, may have been on this day, I thought, all right, I'm going to be clever. We're in the oversold area. It's doing a doji. It's almost the same magnitude. I'm going to cover my puts. I made good profits, but I've been kicking myself for weeks that the profits on those puts would have been just astronomical if I did what the chart was telling me, not what my dollar amount was telling me. Or in this case, thinking I was smarter than the chart, and so I closed out up here with good profits. I would have had fantastic profits down in this range. So a lot of people say, well, do you stop out of a position when you've lost 3%, 5%, 7%? The market doesn't give a hoot where you bought. What is the major factor is, what is the chart telling you? When, if you're short, when is it time to buy? Not when you've made a 40% profit, an 80% profit, a 100% profit. It's when the chart tells you it's time to cover that short. You could. You could probably go short again, but you're down here at the, yeah, you could probably go short again. Okay, we did throw, these are the tanker. So there's kind of your bobble breakout on DHT. Which kind of assumes that you're heading back up to the top of the channel. Blue Apron, another one that you watch, because what's happened once you got back to the T-line? Kind of a little Morningstar signal, an inverted hammer, a doji. If it starts trading positive, you might go after it, because you could go from 11 up to 18. That would still be a significant profit. Bobble breakout, John, what were you referring to? Steve, hold on to your individual ones. I'll just do it because we're here. What do you think about insider buying on ATH? I don't think about it at all. I don't care who's buying. I'm just looking at the chart to see whether this chart is worthwhile to be buying. I don't care whether it's insiders. I don't care whether it's somebody's grandmother. I'm buying price, not who is buying or why they're buying. So there's your cradle pattern on SRCL. Big candle, flat bed. There's your headboard. There's your bed. There's your footboard. Look for the trend to move up. This is why you want to identify, one, the setup, and two, the fact that they closed above the T-line gives you a high probability that you're heading higher. Now I can't remember which one we were buying because it did do a cradle pattern. It's got to be something that I remember. CMD. It's kind of a cradle pattern. So that's a high probability reversal signal. This is a bobble breakout. First trend up, pulls back to the T-line. I'd be a buyer if it came up through here, because what would that tell me? That we're breaking out of a J-hook pattern. Wave 1, wave 3 is going to be the same magnitude. They work extremely well as far as consistency and probabilities. If this opens positive tomorrow, what do you got going on? Wave 1, a failure at the resistance level, where they pull back to, right to the T-line. If it opens positive, what do you have going on? Wave 3 probably taking you up into this area. So if you're an option trader, or even I shouldn't say that, option trader or stock trader, if you see a bobble breakout, look how this one broke out. There's your best friend bobble breakout. What do you expect from here? Wave 1, wave 3 is going to take you much higher. OSUR. Look what happened as the bobble breakout occurred. That's where everybody starts getting enthusiastic into wave 3. LLNW. There's your Bobble breakout. Wave 1, wave 2, going into wave 3. It's just an extremely high probability trade setup. So if you're watching glue, what's this about ready to do? If it opens positive, what do you got going on? A Bobble breakout that's probably going to give you the same magnitude as this right here. So these are, the reason I point these out is because human nature works the same way time after time. There's kind of a Bobble breakout. For some reason, it was more, I thought the 50 was up here. But you can see the T-line crunch, and you can see the Morningstar signal. What do you want to do on this one? If it opens positive tomorrow, kind of breaking this little downtrend, you're probably going into wave 3. Now, each one of these patterns that you can recognize also allows you to know exactly when the pattern didn't work. Let's say I bought this tomorrow and it traded up here, broke out, then came back down and closed down here. What's that tell me about my breakout? It didn't occur. Close out the position. I have less mental stigma now that if I see something that's supposed to work and it doesn't, I close it out, because right now, if you wanted to put your money someplace, you've got more places to put them in on good trades. It's kind of a wedge, yes, but more of a T-line crunch. You can see where the resistance level. But you've got more places to put your money right now than you have money to buy all the good trades out there. So now it's just a function that if you've got a trade that's not working well, you close it out and you move on to a better one. There's kind of your, not so much a Bobble breakout, but look at the VAPO. So here's another one that came right back to the support level, Morningstar signal at the T-line. Now they're right here at this breakout level. You can still be buying this one on positive trading. Johnson & Johnson wouldn't trade this because it's too stodgy, but it's got a good pattern. It's got a kind of a double doji bullish flutter kicker, broken through this downtrend above the T-line. It's probably heading back up here. Not a significant move, but one that you could probably put a very profitable, it's stodgy in the sense that the big institutional stocks, you can see, don't have big, huge percentage moves. But you don't need it. Let's say you put on a 135, 140 call spread, that if it went to the 50, would take your $1.80 to $5. That's a reasonable rate of return. Can you have stochastics in the overbought position even when the price is in the lower half of the chart? Do you consider sell signals in? You can have stochastics in the overbought position even when the price is in the lower half of the chart. No, the price is not going to be in the lower half of the chart. Which one were you referring to, Don? Let me look at something. Let me look at it. Yeah, from what it looks like today is a numerous number of companies are coming up. Let's see. Baxter Labs is coming up with the personal test kit. Another company is coming up with a method to sterilize masks, which might be a deterrent to APT, which broke out today, but it's trading lower, maybe because the demand for individual masks may not be as excessive at this point. Cry. Remember what this looks like. Looks like a cradle pattern setup. So what do we want to see? Probably be more apt to buy this if it opens up positive or starts trading up above the T-line, because now you have a cradle pattern set up. BAP. Whenever you start seeing this series of dojis, you watch to see what's happening here. If this opens positive, you probably have a good prospect of bouncing back up. Just because of that signal setup in this area. I know a lot of people have been watching Peloton. There's kind of your J-hook pattern, and what makes it more relevant, look how the T-line's kind of supported it right up through the resistance level. If this trade's positive, what do you got going on? Wave 1, wave 3, probably bringing you up here to fill the gap up in this range. ANET, there's your best friend Morningstar signal, doji sandwich. Now you're at a resistance level. You're not anywhere near, you're not quite yet in the overbought area. Where's your next target? There's a gap to fill right here. That makes the 200 a likely target. So not only can we see when the the buying starts again, there's that little cradle pattern. You can stay long on this one. Let's see, all right. I guess that's about all I got for tonight. I'm going to go back and so that looks like a good bobble breakout. Yeah, I guess that's, oh, yeah, hold on. Somebody's asking for the link. There's the link for the weekend. Hold on. Are there any general questions on candlesticks? This is, again, if you fell asleep during this session, this is what you need to remember, is that McMuffin is a very, very compelling reversal signal. That's adding a lot of investor sentiment into a pattern that tells you they've definitely turned positive. The McMuffin is a Morningstar signal. That's a big down day, a day of indecision, and then the third day opens positive, trades positive, and closes more than halfway up this candle. That's one of your 12 major reversal signals. That's Morningstar signal. Now, look at what follows it. There's your doji sandwich, which is a doji, and we know what constitutes a doji sandwich. A doji rule, which is if they open up positive, more than likely this day right here is going to be the same magnitude as this day right here. And what do we expect coming out of a doji sandwich? More upside. So we've got a morning star signal, that's a reversal. We've got a doji sandwich, which tells you there's more upside. Or we basically have a morning sandwich, which is your McMuffin, just a high probability trade. Oh, Art, it took me a couple months to at least not be the worst trader in the world. And it started keeping me from losing money. Then after that, it took another 6 months to realize what you needed to do to keep your emotions out of your trading. And so it took me maybe 6, 8, 10 months to really be convinced, because I would see things like this and I'd say to myself, oh, that can't happen. Look at all the bad news out there. So, and when I was learning, I always tell people when I was learning, there was nobody to confer with or get a second opinion of whether things were working. I always tell people that the only time I got a second opinion was when I would go to the doctor. I'd say, what's wrong with me? He says, well, you're fat. I said, well, I think I want a second opinion. He goes, all right, you're ugly too. So after a while, it got to the point where I wasn't losing money anymore. And I got my thinking turned around completely. That instead of me being the seller down here, where I couldn't stand it anymore, or if I was holding on to something down here and I'm thinking, all right, when is this going to turn around? And not so much, when is it going to turn around? Why am I holding something long in this type of trend? What told me I should be out? Well, there's my sell signals. So that kind of started batting me in the side of the head that I should be ready to sell when things are in the overbought condition, and I should be ready to buy when things are in the oversold condition. That's right. All the food affects your belt holders, right. So this is why I started investing, or started the website, is because I'd been a stockbroker for 8 years. There was a bunch of traders in Houston that we always hung around together. He said, well, what are you doing that you're starting to make money that's not like you? So I started showing them candlesticks, and I thought, well, who named them? Most of them were named by the Japanese rice traders. Now, obviously, they had Japanese names that were converted into English. Now, things like the McMuffin, I made that up just because I didn't want to constantly say a morning star signal followed by a doji sandwich. McMuffin kind of said all that. And I don't think they had a name for the J-hook. I just gave it a J-hook because that's the first thing that came to mind. So, anyways. So, the 8 to 10 months that it took me to learn, that can be compressed. Because now you have somebody that's shown you what should be working. So it's not that you're learning and trying to be convinced that this works. If you look at it and say, all right, Steve says this works, I'll take his word for it. Now I can do stuff immediately, meaning I can be buying, and I can test it for myself to know that it's doing what it's supposed to. So the thing that really, again, I always wanted to invest. I even, before candlesticks came along, they had the 900 numbers that I would call, and they'd tell me what to do with corn or cattle or crude oil. But after a while, it became just very visually easy to see when we had a sell signal in the overbought condition. And I started recognizing not only the sell signal, but the strong sell signals, like a bearish left-right combo. That's when you start going short. So anyways, what you have as an advantage is not doing the same mistakes that I did, and some of them I did 7, 8 times just to make sure I had those mistakes down pat. Now just kind of, I'm not going to mislead anybody. When we're looking at sell signals, it's because I recognize them as being a very strong buy or sell. Okay, so that's why, again, I don't push people into things, because I figure if you can't see for yourself the common sense and the results of the signals, then there's nothing that I can do to tell people, oh, it's great, because it's just pure common sense. And that's why I tell people, if you've seen bits and pieces, what really brings this together mentally for you is the 2-day training where we do everything in order. So, anyways, try it. Always tell people you're going to get more than your money is worth. And that's what keeps people around, is they see there's a lot of logic to this. So, with that, Jim, go ahead and do the double line. And in 3.8 seconds, do the next double line. Okay, on INO. Based on your candlestick insights, I bought a call yesterday, green candle. Oops, people are still clicking in. At the open. You bought yesterday at the open, right here, okay? Oh, okay, good for you, Deborah. All right. Okay, Boeing. Boeing had the obvious. Look at your cradle pattern. Yes, good entry on positive open, because that's going to give you a J-hook pattern. Why would we suspect a J-hook pattern? Because you've got a pattern breakout, a cradle pattern, and when they start gapping up, that tells you they're trying to come back into these trades with great enthusiasm. The fact that they did a doji hammer right here on the T-line told you what? Told you they weren't closing below the T-line. If they open positive, now you should be recognizing that that's a J-hook pattern, and wave 3 should take you up toward the 50. BABA, not as clean a chart, but you still have that best friend evening or morning star signal. You stay long. You can, if you want to buy this on positive trading, you can. Now you still have a resistance level, which is here at the 34, if you draw a line down through there. So if it breaks through that level, that's when you start heading for the next price move. Based upon candlestick signals, what kind of return can one anticipate year to year? HS, the upside is, if all I had to do each day was trade, I could probably make 10% a month on my trading. And that's probably not including the option trades. Because I know that 3 out of every 3 trades, 2 of them are going to be profitable. 1 of them isn't, and I'll get out with a small loss. Now, if you take 10% and compound it, that's 312% annually. Now, the bigger the account, obviously the less aggressive you want to be. But even at 5% a month, you're still going to make, and that's not a difficult process if you're sitting here watching your trades. JNUG, that's pretty flat. Am I looking at the right thing? Yes. I don't understand why that one has gone so bleak. You wait for that to come up through the T-line. Micron, you stay long on this one. The gap up through the T-line. And GWPH. Sorry, I was daydreaming. You can stay long on this, but definitely needs to open positive. If it opens lower tomorrow, I'd close it out. Netflix. Stay long on this one. NVAX. Kind of a J-hook pattern, staying above the T-line, and you're right here kind of at a resistance level. I'd still be a buyer of this one on positive trading. Sienna, notice the T-line acting as a support. There's your kicker signal. Opens here, closes here, gaps up, and goes the opposite direction. Match. Just stay long. Kind of your little bobble here at the 34. First target, second target. There's a gap right there that would make me think they're going to the 200. VJet, big left-right combo. Now make sure your volume's good on this price of stock, but this is where you start watching for that 45 degree coming off of there. This one, KNL, you're right here on, obviously right on the T-line. Let's get rid of these. There's your doji, hammer, doji, bullish. You can buy this one on positive trading. Then use the T-line as your stop. SCI, you can buy this one on positive trading. Not quite a cradle pattern, but you can see how it based down here. Boeing, you stay long if it opens positive tomorrow. 3M, you can buy this one. Not a very, again, this being an institutional trader, you probably want to watch to see if it can come up here to the 34, which is this downtrend. But notice that this is not a signal. This is more of a signal, a left-right combo. So if you're buying, it's not your greatest looking chart, but it's going to be heading in the right direction. So you probably want to I'd put a call spread on it. Microsoft, you stay long. Again, there's your best friend, Morningstar, McMuffin. Coca-Cola, stay long on this one. Again, not a very exciting one because it's the quintessential institutional trader. But it's also heading in the right direction. Let's see. Facebook. Facebook's having a hard time getting out of its own way. It's moving up. Well, I guess it did better. You can still stay long. Again, there's your Morningstar signal with the best friend start. I just watch to see what it does once it gets to the 34. And Teva was giving away, what was it, 6 million doses. You can buy this one. There's That's not a great looking chart, but if you can buy it, it's just not a great looking chart. Red Robin, you get ready to short this one. There's your bearish J-hook pattern. So, very simple. When you saw the bearish Harami, even though you weren't in the overbought area, where do you think the first target was going to be? Back to the T-line. Now, what did you need to see to stay in it? You needed to open positive and trade positive. The fact that it started trading lower told me I should close this out. That's not good. Now that it closed down here, if it opens lower, look for more selling. I guess it can't go too much further down. KRA, we did. You can be buying this one. There's your Morningstar signal and your doji sandwich. I would watch here and then figuring they're going to fill the gap heading for the 50. INO needs to open positive today and trade positive. If it comes back down through the T-line, what's it tell you about your trajectory? It's disappeared. It's become a crummy looking chart. Royal Caribbean, another one you can go short on weakness. Long-legged doji, make this bigger. And the close below the T-line. And when I say that, close below the T-line, that's the whole point of the weekend training. The probabilities, because of this line right here, will just dramatically not only improve your trading, but will drastically improve your evaluation of what trades you should be in and what you shouldn't be in, or when you should be out of trades. It's just of all the indicators out there, Bollinger Bands, trend lines, Fibonacci numbers, anything you can think of, the T-line is the most effective, especially when you're using it with candlestick signals. Occidental, you should not be in. Right now, which way is Occidental going? Pretty much nowhere. I'd be someplace else. That one, you stay long. Look at your long-legged hammered doji. You stay long. Kind of your bobble breakout. Look for more upside. Let's make this way smaller and see. I would suspect that I would just stay long. Stay long and don't let it close back below the 50. And Fizz, that's kind of a junky chart. Even though it's gapped up, you can buy it if you like it, but man, it doesn't know which way it wants to go. So I would probably be trading something else just because that's not something you can really get a visual grasp on. Amazon, you get ready to buy this one on the bobble breakout tomorrow. Did I do that right? Is that SXL? Or are you trying to get to the socks? You can get ready to buy this J-hook type pattern. Nordic. Again, one of the tankers. Look at your little gap up right here. Let's make this big again. And then you had kind of a double doji sandwich that broke out, bobble breakout. You stay long. However, notice they gapped it up. You're not quite in the overbought area, but I'd keep a safety stop right here at today's open. And work, you stay long, but observe the obvious. Look where you're running into resistance, right here where kind of topped out before, and you're just climbing in the overbought area. I would probably have a safety stop down here that if they traded this direction, it's pretty much telling you they aren't going up through that resistance level. And DXCM, just stay long. Let's see, I had that written down somewhere. Oh, because of the bobble breakout. I would just stay long on this one. And Alta, another one that if this opens positive tomorrow, Doji sitting right here on the T-line, stochastics trying to head up. Very simple. It's going to move in the direction of how they open after the Doji. If it opens positive, you got wave 1, wave 3, probably bring you pretty close to the 50. And CI was also looking good. Notice how they gap this up, kind of a kicker signal. You stay long. You're running into the resistance, so you want to make sure it can get through the 200 tomorrow. ATI we did early. You want to see this open positive. Use the T-line as your stop. Same thing on Boeing. It needs to open positive. And XL and X. It's all right. It's just having a hard time getting out of this fry pan bottom. If you're long, you can stay long, but I probably wouldn't be buying this one because you still don't have a whole lot of enthusiasm telling you the uptrends and starting yet. Let's see, we did the Zox and Zoom. As long as it stays in this upward trajectory, even though it backed off today, you're still trading above the 3T line, which is significant. The SPY, stay long. Visa, you can stay long on this one. Again, there's your kicker signal reversal. There's your kind of your McMuffin. And ARR, that one you should have closed out today. The REIT's backed off for some reason. Oops. Maybe check to make sure it didn't pay a dividend today on ARR. And this one, nothing wildly exciting here. If you didn't close it out yesterday, after the failure at the 50, and you stayed long, it definitely has to open positive and trade positive today. Cincinnati Bell. Bounced up off the 50, did a doji sandwich. All you can do is stay long. Again, put your safety stop below the T-line. We did NVIDIA. NVIDIA broke out. Look for wave 3. UCO, nothing. Okay, what are you looking at there? That's nothing. And DHT, we did. Broke out nicely out of this bobble breakout. I would love to get a link to the 12 signals. Yeah, if you can't find them on the website, just have they should be in the members products and services area. Oh, okay, yes, JNUG discontinuing. Yeah, I know a few of them are like that. Cars, nothing great. Oh, boy. It's basing, but I would have liked to have seen a signal breaking out. So it's kind of a junky cradle pattern. So if you're buying it on the basis that you don't have a strong reversal, so you get ready to come back out if it comes back, or if you see your first sell signal. PBF, Nothing yet until they can get this up above the T-line. How come this is so small? What have I done? Now notice they did gap this up from here, so you can be buying this one on positive trading tomorrow. Teva we did. It doesn't have a real reversal right here. It doesn't really have any reversal signals. So, yeah, it wouldn't be one of my favorites, even though it's starting to trade positive. This one you can buy on positive trading tomorrow. You can see how it's held here at the T-line after your Morningstar McMuffin. Space, nothing here yet. Notice where it closed today, back below the T-line. I would not be trading this one. VIX should be heading down, which is an indication the market will be heading up. I would stay long on Zoom. I wouldn't buy it here. I wouldn't buy it until it came up through this level, giving you a J-hook pattern breakout. Clack, just stay long. Another McMuffin working. Square, stay long as this stays above the T-line. Okay, but there's no buying. Is this one of the ones that they've discontinued? If they're not there, email Abraham at candlestickforum.com. He'll get you to the right spot. Okay, here somebody's wanting this again. All right, here's that. NVAX, just stay long. That's kind of a nice little breakout. Look at your left-right combo. I would stay long on this one. ExxonMobil. Stay long as it doesn't close below the T-line. Okay. All right. Remember, going away. Remember the bobble. Not the bobble. The McMuffin. Very strong, and I've got charts showing the Dow reversing very strong a few times when you saw the McMuffin pattern. All right, I've kept you way past bedtime. So with that, everybody have a good evening. We will see you bright and early tomorrow morning in the chat room. So we'll see you then.